Everyone says it. Trust your gut. You hear it in trading forums, in Discord chats, on Twitter threads from people posting one winning screenshot and disappearing the next week. I don't overthink it, I just trust my gut. And it sounds powerful, almost romantic, like the market whispers secrets to those who are calm enough to listen. But here's the truth most traders learn too late. If you consistently trust your gut in trading, you're not being intuitive, you're slowly destroying your account. And the worst part? It doesn't feel reckless while it's happening, it feels confident. That's why this advice is so dangerous, because what you call your gut is usually just your last trade talking, your last loss, your last win, your last moment of regret. And if your channel is stuck, if your trading feels stuck, this is often the hidden reason. Let's strip the myth away. Your gut is not intuition, it's not wisdom, it's not market awareness. Your gut is unfiltered mental noise. It's a mix of recent wins and losses, emotional scars you never processed, half-remembered chart patterns, cognitive bias, and a nervous system desperately trying to avoid pain or chase relief. That pull you feel to enter a trade, that urgency, that sudden confidence, that's not insight. That's your amygdala, the primitive survival center of your brain, firing before logic has a chance to speak. In the wild, this system kept humans alive. React fast, decide fast, survive. But markets are not predators. They are probabilistic machines, and survival instincts are terrible at probability. Your gut does not understand expectancy. It doesn't see distributions. It doesn't care about long-term outcomes. It reacts to now. That's why gut traders chase breakouts that already moved, why they widen stops just a little, why they enter trades that feel exciting and hesitate on the ones that feel boring but correct. And it gets worse. Humans are pattern-finding machines. We cannot turn this off. We see faces in clouds, we see meaning in noise, and we see perfect setups in random price movement. There's a name for this: pareidolia, finding structure where none exists. Markets move because of liquidity flows, interest rates, institutional positioning, algorithms you will never see, information you will never have. Your gut cannot process thousands of variables, so instead it locks onto one familiar thing, a candle, a level, a feeling, and ignores everything else. That's not intuition, that's selective blindness. And this is where most traders get trapped. You win a few trades in a row, your gut whispers, you're locked in. So you size up. But the market doesn't know you're on a streak. It doesn't reward confidence. It doesn't punish hesitation. It just unfolds. Then comes the other side. You're in a losing trade. Your plan says exit. Your stop is there for a reason. But your gut says, just give it a little more room. Not because price structure changed, not because probability improved, because being wrong hurts. That's not intuition. That's ego trying to avoid pain, and pain avoidance is expensive in trading. Whether you like it or not, trading is math. Expected value doesn't care how confident you felt. Your gut doesn't understand expectancy. It understands, I want to be right. I don't want to feel stupid. I don't want to take another loss. Those emotions quietly sabotage more accounts than bad strategies ever will, because trading is a game of probabilities, and the human brain craves certainty. Your gut wants a yes or no. The market only offers maybe. When you trade with a system, you think in series. When you trade with your gut, you think in moments. Professionals don't need to feel good about a trade. They need to know that over the next 100 trades, this setup pays. Your gut can't think 100 trades ahead. It can only think about the one flashing in front of you right now. That's why gut trading feels intense, emotional, alive. And that's exactly why it performs so badly. But what about expert intuition, people ask? What about the legends? Yes, some elite traders talk about intuition. George Soros famously said his back would ache when a trade was wrong. But here's what almost everyone misses. That wasn't instinct, that was compressed experience. Expert intuition is not magic, it's pattern recognition, forged by thousands of hours, relentless feedback, and statistical reinforcement. If you haven't logged those hours, your gut isn't wisdom. It's a random number generator influenced by stress, confidence, caffeine, and how recently you won or lost. Beginner intuition is not intuition. It's noise with confidence. And stress makes it worse. Your gut doesn't just read markets, it reads you. If you're tired, it changes. If you're stressed, it changes. If you're emotional, it changes. I remember a trade years ago. Every indicator said short. Structure was clean. Risk was defined. But I felt lucky. I went long, and in 3 hours, I gave back an entire month of profits. The market didn't trick me. My mood did. That's the core problem. Not lack of knowledge, not lack of strategy, but trusting an emotional system in an environment that punishes emotion. So what's the solution? You don't fight your gut, you contain it. You build a system that acts as a firewall between feeling and execution. First, everything runs on if-then rules. Never enter because it looks good. If criteria A, B, and C are met, then you execute. No debate, no interpretation. Second, you add a delay. When urgency hits, step away. 5 minutes, no screen. If the trade still qualifies by your written rules when you return, take it. Most gut trades die when dopamine fades. Third, you journal honestly. Not just entries and exits, emotions. After 50 trades, the data becomes uncomfortable. Gut trades underperform. Mechanical trades compound. Every time. And here's the final truth most traders resist. Calm doesn't come from intuition. It comes from repetition. From seeing the same setup play out hundreds of times. From knowing one trade means nothing. From trusting a process more than a feeling. Over time, your gut does change. But not because you listened to it, because you trained it. Until then, your job isn't to trust your gut, it's to survive it. Because in trading, the most dangerous voice you can follow is the one that sounds the most like you.